We lost more than 20 billion euros in receipts, billions in social security charges, corporate taxes, sales taxes.
Is France on the brink of financial crisis? France is in for a rough ride ahead. Wars, high interest rates, and economic slowdowns are hitting hard, forcing the government to slash spending. The wars in Ukraine and Gaza, along with slowdowns in Germany and China, plus record high interest rates, are taking a bigger bite out of France's growth than expected. The French government just announced massive cuts of $10.8 billion in spending, including reductions in environmental subsidies and education. This comes on top of the $17 billion in cuts announced earlier. The finance minister, Bruno Le Maire, recently downgraded the growth forecast for this year to just 1%, down from 1.4% last year. Lower growth means lower tax revenues, so the government has to tighten its belt, Le Maire warned at a news briefing. France is facing tough times, and it's the people who will feel the pinch. During the pandemic, France splurged on supporting the economy and protecting consumers from soaring energy prices. But now they're in danger of breaking EU budget rules that limit how much governments can borrow. To steer clear of this, France must slash costs to reduce the deficit to 4.4% of the gross domestic product this year, down from 4.8%. If they don't act fast, they could face serious consequences. Paris is on edge as international rating agencies threaten to downgrade French debt, a move that would drive up borrowing costs. This comes as France, like much of Europe, struggles with a sluggish recovery compared to the United States, where consumer spending continues to drive economic growth. The need for budget cuts could potentially hinder Macron's plans and impact the implementation of these investments. While France has seen some success, like in unemployment, which went down to a 15-year low of 7% last year, the country is now facing a noticeable slowdown. Unemployment is creeping back up as manufacturers reduce production and exports decline. Consumers, concerned about high inflation, are also cutting back on spending, which is a major driver of economic growth. The political landscape is only adding to President Macron's challenges. He is working to counter the rise of Marine Le Pen's far-right National Rally Party, which is capitalizing on the economic slowdown, immigration issues, and EU regulatory requirements to attract disillusioned voters. The European Central Bank's historically high interest rates are causing problems. Even though inflation is starting to ease, the high costs of borrowing money are still hurting businesses and the real estate market in some parts of Europe, including France. This has led to a drop in housing prices because banks are lending less money for people to buy homes. Sales of existing homes in France dropped by 20% compared to the previous year, while new home sales plummeted by nearly 40%, according to government data. The road to recovery for Europe appears challenging, with multiple factors contributing to the ongoing economic struggles. France has slashed spending on vital areas like education, justice, and defense through a government decree. The government had to shell out 400 million euros to appease angry farmers who threatened to blockade Paris over soaring costs, cheap imports, and EU paperwork. Funds were also diverted to boost police pay for the upcoming Olympic Games in Paris. Additionally, France pledged an extra 3 billion euros in aid to Ukraine. The impact of these cuts is dire, raising concerns about the country's future. What do you think about France's budget cuts? Share your thoughts in the comments below, and don't forget to subscribe to our YouTube channel for more updates. Thanks for watching.